Hello, everybody, and welcome to Conversations with the Dean. I'm Turney Stevens, Dean of the College of Business at Lipscomb University, and I'm honored today to welcome a very special guest, Jim Schmitz. Jim is the area president for Regions Bank here in Nashville, and Jim, we've heard a lot about banks, haven't we, in the news in recent months and years?
I'd probably say over the last 3 years, probably too much.
You have been in the headlines.
Yes, we have.
Some good, maybe some not so good. I guess let's just dive right in. What's the state of banks in the United States today? Is it good or bad?
I think you have to separate it into different buckets. And the part of what so much of the publicity has been about that's tough on a bank like us at Regions and the folks that work for us is so much of what people are complaining about and having issues with has to do with the investment banks, the Wall Street banks, the really large, those that truly are the too big to fail banks. But when somebody talks about banks, nobody separates out that difference. So I think in one sense you have these large, really international money center type banks. You have then the smaller, the community banks that are out there that there are thousands of in all communities across America. And then in between you have this handful of super regionals in which we fall into, which we're really not the too big to fail, but we're larger than those community banks. And I think there's probably a different answer to that question for each one. I think the large banks are probably, for the most part, are pretty healthy. There's some concern about Europe with investments that they may hold over there. For the super regionals, we don't have a whole lot of, I don't know, I can't speak for all of them, but I feel pretty comfortable in saying that most do not have large exposures to Europe. Everything's pretty much U.S. based, and with some of the things we're seeing in the economy, they're probably in pretty good shape. I think most now, from the bad credit that we saw in real estate and others, a lot of that is behind us. And I think they've moved along, so I think they're in pretty good shape too. The smaller community banks, it's all over the board. There's some of those that are very good, some that are maybe newer that were started at the point where we were already in trouble and they didn't make a lot of these residential construction type real estate loans or mortgages, et cetera. But then there's a whole other bucket in that community part that, we just saw two banks fail in Tennessee, the first time banks failed in Tennessee in years. We saw two of those, I guess, 2 weeks ago. So there's still some issues, I think, out there for some of those. As the regulators get further and further down the food chain there, we'll probably have more of that pop up, I would guess.
You hear all kinds of things on the street. You hear business people complain that banks are not making loans, that even if you have good credit, you can't get credit. Is that true?
No, I really don't believe it is. I think what's happened is so much of lending that took place was based upon value of real estate, and with the decline in the value of real estate across the board, people may not be in a position to be able to borrow, and that we see that as an issue in a lot of cases. But I can tell you the competition for business loans right now is fierce. Pricing on loans has dropped quite a bit as that competition has taken place. There's some who maybe even fear that from the way we go about structuring loans, that we may even be getting back, in some cases, being a little bit too loose. Let's make sure we don't make some of the same mistakes that we made last time around. So I really don't think that that's an issue. If you are a credit-worthy company, with good experience, a balance sheet, cash flow, I think you can find debt if you want it.
Another comment that you hear from business people is, well, I can only borrow money if I don't really need to borrow money. In other words, if I can guarantee that there's zero risk to the bank by fully collateralizing the loan, then the bank will do business with me. So do banks take any risk, really?
We take risk, but it's a calculated risk. I mean, we're not venture capitalists. We're not going in and saying that we have this huge upside. I mean, we have to remember that when a bank makes a loan, we may get a little fee up front and we get a little spread. It's not a big spread, and today with where rates are, the spread is even smaller. So you have to look at the risk reward, and you've got to, on the one hand, you have to really protect your depositors and your shareholders and make sure that you're making loans that can be paid back. So the level of risk there's risk there. There clearly is, and we have to evaluate that on everything that we look at and everything that's in our portfolio. But you have to, I think some people expect us maybe to be, if you're just a startup, you've got an idea and you want to open up this business, your capital isn't going to come from the bank. The capital is going to come from an investor, somebody who can take a larger ownership, a larger piece, and has a much greater upside.
Sure.
To go with that balancing downside.
Now, we've seen a lot of technology changes with banks. In many ways, banks have perhaps even led America in terms of technology changes. I can take an ATM card anywhere in the world and get money out of my bank account. Where is that process headed? Do you still think there's a need for bricks and mortar branches?
I think there will always be need for bricks and mortar because we're people. Mm-hmm. We're social beings. There's going to need to be that face-to-face interaction, especially when you're talking about some things that can be as private as your personal financial situation and being able to get good advice and all that. You have to have that face-to-face. But I do think that over time, the need for those will reduce. There won't be, I think I can see a day in the future where there will not be as many bank branches out there as there are today. I mean, I can tell you that I know our head of consumer banking has gotten with our folks in our bank and said, this will be the bank in the future. And so, now I have, we have mobile banking. I can go if I get a call from either one of my sons in college and they say, Dad, I need a little money in my account. No matter where I am, I can get on here, get onto the app for Regions Bank, go on there and I can transfer money from my account into theirs or whatever I need to do. I can pay bills. I can do all those things from my smartphone. So, and the capabilities of what you can do with that, I think, are just going to expand over time. Our ATMs now we have what we call smart ATMs, where it used to be you had to fill out a deposit slip, you had to put it in an envelope, you had to fill out the
Sure.
envelope correctly, you put it in there, and then it went until someone came by and picked that up then and took it in and counted it, so you didn't get credit for it for a few days. Now you take a check and you just slide that check in, you get almost immediate credit in your account, and then your receipt you get back, there's a little scanned imprint of that check for you to be able to have with you for your records.
And I haven't been inside a branch since I discovered that I could do that.
There you go.
Because I just go through the ATM and put the check in the ATM, and I don't have any need to go inside a branch.
Right. Now, if you're going to open up an account, you're going to change maybe the products and services that you have, et cetera, then that's something you need to do. What it does cause for us, for banks, is in the future, it's how are we going to reach new customers? Mm-hmm. Because so much of that is people who walk into the branch. If you reduce your coverage from a branch standpoint, a real challenge for us is going to be how do we attract how do we get that person to get those products that they can carry on their hip?
Jim, you made an interesting statement early in your comments today. You said there were still thousands of community banks across the country, and I guess that comes maybe not as a surprise. I was aware that was the fact, but most people probably would perceive that the bank business is much more consolidated than that. And so do you see that there is still a future for new banks? Do you anticipate there will continue to be startup banks?
I think as in any industry, as changes take place and things go on, there's always going to be a need. Somebody's going to have, I've got the new mousetrap, or I've got a better idea, or there's going to be an opportunity that arises. So I always think that there will be new banks. But I think in the near term, what you'll see more of is some consolidation taking place. I think I heard the other day there's something like 8,500 banks in the United States. And I think that number will have to go down for a number of reasons. The cost for banks to be able to comply with all the various regulations, with all the different agencies that are out there that we deal with. I mean, if you start thinking about who's examining and banks, I mean, you can go from, you got the comptroller of the currency, you've got the state, you've got the Federal Reserve, you've got the FDIC, and I haven't even touched now the new CFPB. I mean, I haven't even hardly touched on who all's out there. The cost of compliance is higher, and probably for good reason. So what's happening is if you've got a small bank and your profits are only going to be, so big, how do you afford to say, I've got to bring in a couple of people at $100,000 plus a year to be my compliance officers and to make sure that I'm taking care of all these things? And I heard the other day, I think we're only 25% down the way of having all the rules out of DoddFrank written yet. So there's more to come on that. So what's going to happen is there's got to be certain economies of scale, and the smaller banks are going to have to band together to be able to do some of the things that they need to do. So I think you'll see some consolidation, but I think there's always going to be room for new banks and new blood to come in and try something a little different.
Hey, well, you've mentioned Dodd-Frank, and of course that's a piece of legislation that has been very controversial. It came about as a result of the crisis that we faced after 2008. It was designed to address the issue of banks being too big to fail. And so in your view as a banker, is that a good piece of legislation? Is that a bad piece of legislation? Are you just going to have to live with it? Where is that headed?
I think it's something we have to live with, and it's something that we have to do our part now as these rules get written, because I believe it's a 2,000-page bill, but it doesn't go in. The devil's in the details, and now the different rules that have to be written by the various agencies and all have to take place. So we have to be involved in that conversation in a very positive way to try to influence that, but also to try to make sure that both sides of the equation are looked at and we don't get anything out of balance. There are some elements of it that are very good. I'm not sure that it accomplishes everything that we wanted it to accomplish up front, but it is something we have to live with, and we can't look back.
You also mentioned the Consumer Finance Protection
Bureau,
CFPB. The CFPB. Now that's one that most of us haven't heard a whole lot about, but I understand that it has had some radical changes in approach to regulation. So talk with us for a moment about that.
Sure, it's part of DoddFrank. It's a new agency, and unlike, bank, like I was going before, naming all those different agencies that regulate banks, all those that I mentioned and several others are concerned about the safety and soundness of banks. They look at our loan portfolio, they make sure that we have the proper amount of capital, they make sure that our policies and procedures are in place, that we're doing everything to protect the shareholders, protect the banking system, et cetera. What the CFPB does, though, is different. They're not there to regulate or even look into our safety and soundness. They're there to ensure that our products and services, I'll paraphrase from their mission statement, work for the American people. So part of all that, you're going to see, I think you'll see, it's already started, a much greater wave of banks being more responsible in providing financial literacy education to ensure that our customers understand how to use appropriately the products and the services that we provide them.
You know, your role, I would assume, as president of the area region's banks would involve a pretty close watch on the future of the economy in Middle Tennessee. I would think you keep a pretty careful eye on that. So let's change gears just a moment, and instead of talking about your bank, let's talk about our city, our region, our state. What is your view of our current state of the state of the city, and where are we headed in terms of our economy?
Well, I think we're in very good shape. Now, it's relative, you know. It wouldn't be very good shape compared to where we were in 2005. But in comparison to, I think, the rest of the country, I think we're in very good shape. We have a very diverse economy that some of it somewhat recession-proof if you look at the healthcare industry. Rising tourism, I think, will be a big benefit to us. You look at the Music City Center downtown, the new convention center. I think that's been a huge plus already just from the construction portion of it. But I think it's going to add even more flow of people to Nashville. It's nice to see Spring Hill. It's nice to see GM coming back down there in a bigger way. So it's diverse enough that I'm very bullish on the economy here in Middle Tennessee. I think it's going to remain I think it's stronger than most places now, and will only continue to get stronger.
You came from North Florida, I think, by way of California. You were born in California.
That's right.
So you've experienced some high growth parts of our country. It's really interesting to me, Jim, as I've observed over the years, people are transferred into Nashville and then they just refuse to leave. Are you going to be one of those?
I think there's a good chance.
You like it that well?
I do like it. I like it a lot. As I tell people who maybe haven't been here or have just visited and not lived here, is Nashville is a great mix. It's large enough to offer you most of the things that you would want out of a big city, but it's still small enough that you can get around very easily. I mean, when I can live, I think I live 15, 20 miles outside of town, and I can get to my office downtown and in the morning, unless there's an accident on the interstate, I can get there in 25 minutes. That's pretty good living.
That's pretty nice.
That's pretty good.
25 minutes to the airport, 25 minutes downtown. That's not bad.
Right.
That's not bad. So we were laughing before we began our program today. Our mayor is on the campus speaking to a group today also, and you had noticed that he had a parking space. If you were suddenly tapped on the shoulder and made mayor of Nashville, what would you do on day one?
Wow, that's a great question. That's a great question. I think I would probably push towards seeing what we can do on more of a regional basis. And Mayor Dean's doing he's made some push out to do that. But so much, it's so easy for communities, and I've seen it in other places where I've lived, where the main business hub of the area, people move away from it. The taxes are higher or whatever the case may be, and they move out further. They still rely on that central business district, but for things like transportation, how do you pay for better transportation to get more cars off the road, whether it's some type of rapid transit, but how do you pay for those things? The only way you can do that is on a larger regional basis. So I think that's one of the things that we're going to face over time. You look at a lot of the problems that take place in Davidson County, a lot of it is because of the lack of money, and because a lot of that wealth and whatnot has grown up around the city or moved away from the central part of the city.
We are seeing some interesting trends, though, aren't we, with the infill developments in East Nashville and Germantown, 12 South, the Gulch. There are some really interesting things going on. Do you, as a banker and an observer of these things, do you promote that? Do you see that as being a positive sign for the future of the city?
I do see that as a positive sign. I mean, it's not, everybody has a different lifestyle which they would want to live. I'm not sure that would necessarily fit for me, but but there are some very interesting neighborhoods. I just had a good friend of mine from where I lived in Pensacola, who's on the city council down there and also happens to be an architect. He was up here for a weekend, and we spent a day just driving around, and I said, I'm just going to take you to some of the neat neighborhoods that we've got around here. I took him up to 5 Points, took him to Hillsborough Village, 12 South, a lot of those places, the Gulch, and he just had his iPhone out just taking pictures. Oh, that's a great idea. We ought to do that. Oh, that's a great idea. We ought to do. And just, it gave me another, seeing it through more of an expert's eyes from the standpoint of an architect and somebody from outside looking in. It gave me a greater appreciation.
You mentioned the Music City Center. Do you think that will help drive more residential development in the inner parts of Nashville?
I'm not sure. I don't know enough about convention centers and what they've seen happen in other locations. I think I'm not sure that the two necessarily come together. You might have some just from the standpoint of, as businesses, retail, restaurants, et cetera, things that would serve the people who would be visiting the convention center, people may want to be closer into town to live, to be able to provide those services. But I don't know that there's necessarily a tie there. I mean, I could see where there could be some traffic issues that could actually do the opposite.
Do the opposite, sure. Now, your bank has quite a history in Nashville. If you go back just a few years, it was originally First American National Bank, and it financed many of the great businesses of Nashville. It's set on a strategic corner at 4th and Union, which many people call the Wall Street of the South. Do you feel a pride in the history of the bank that you've inherited?
It's we have a display on the second floor near between where the elevator bank is and where our branch is. There's a display there that talks about the history of the bank, even back before First American. I mean, it goes all the way back to I think it's 127 years ago when the bank was originally founded. And there are pictures of the presidents over time, and there's a nice narrative that talks about that. So you can't help but read that and have an element of pride about that. And I mean, we have customers all the time who say, you know, I've been with your bank for 50 years, you know, and I have a business banker, Laura Roberts, who will be in June celebrating 50 years on the job and still doing a great job and getting after it every day. So yeah, there's a lot of pride there.
Well, you know, when I first started working downtown, in fact, before I graduated from college, I interned at the corner of 4th and Church, and I couldn't afford to park anywhere close to the building, so I had to walk a long ways, and I walked right by what was then a hole in the ground and later became the First American Center. I watched that building under construction for an entire summer, and by the time I went back the next summer, it was built and maybe occupied even by then. But that goes back to, I guess, 1970 or 71, something like that, about the time.
Mm-hmm.
About the
and
time
that's also a bit of trivia. That's also where the bones of the saber-toothed tiger were found.
Right, yeah.
Which eventually led to the logo and mascot of the Nashville Predators.
Right.
Is based upon that. And I remember when I first moved here, they used to show a video before the hockey game, and the animated saber-toothed tiger would jump out of his lair and run through downtown. And when he jumped out of his lair, he was jumping out of the basement of our building. So
out of the old First
That's
American
right.
building.
That's right.
Now, you started life in California, Jim, and I happen to have had my spies out and about and found out a little bit about your earlier life. You actually aspired to be a sportscaster, I understand.
I did.
What happened to that career, and how did you end up in banking?
Well, when I graduated from college in Santa Barbara, I had 3 job opportunities. One was to work with my national fraternity, traveling the country, living out of my 1972 Ford Pinto. The other one was to take a job with an entrepreneur who lived in the South, who was originally from Tennessee, and he was going to pay me a salary and provide me a car, and a new car. And then the other one was to continue working as a disc jockey at the radio station I was at, which I realized would pay me just enough to allow me to move back in home with my mom. And I love my mom, but of those 3, I took the chance and hopped on a plane across the country and never really looked back.
Yeah. Think you might ever want to be a sportscaster even today?
Oh, I tell you what, that would be one of those things that if I could, you know, magic wand retire and do that, I think that would be fun.
Well, you know, we talk about careers extending on into later life further and further, and we're going to work longer, and so who knows but what that might yet be in your future.
There you go.
Thanks for being our guest today. Thanks for coming to Lipscomb. You're always a delight to talk with. I always enjoy our conversations, and Regions Bank is a great friend of Lipscomb's, and we genuinely appreciate that.
Well, I appreciate the offer, and happy to come anytime.
Well, we're honored to have you on the campus, as always.
Thank you.
So thank you for that friendship. My guest today has been Jim Schmitz, who's the area president for Regions Bank. Thanks for joining us. I hope you'll come back and join us again soon on another episode of Conversations with the Dean.